Artur Azizov from B2Broker. Let's give him a warm welcome to the stage. Yeah.
Hello, everyone. So, my name is Artur. I'm CEO and founder of B2Broker group of companies. And today, we're going to talk about stablecoins. So, let's start. As you know, stablecoins used by, so you can imagine a lot of use cases where you can potentially use stablecoins. But of course, the high-risk transactions, I think they became #1 users in terms of use cases of stablecoins. And of course, all the Forex brokers, they already realize that there are a lot of complexities by using bank transfer and bank transactions and card transactions. So that's why a lot of brokers, they already moved to stablecoin transactions. And so these numbers, as you can see, is the response to all this banking system because of the complexity of using banks and cards. So the Tether already increased their market cap to 79 billions and daily volume, daily 46 billions. Of course, nevertheless, that you understand all that, okay, at least 50% of those, the volume, it's a kind of fake volume, yes, the wash trading, but still, if even you divide this number by 2, by 3, it's still very sufficient number, daily transactions and daily trading volume. So, some statistics. As you can see, now, the market cap overall of all the stable coins, of course, the major one. So I don't think that we need to consider the minors. So it's already exceeded 150 billions capitalization. And as you can see, back in 2019, it was just even the less than 10 billions. So in just 3 years, we see the huge growth. And this is the real response to all the banking system. That's why all the banks, they kind of afraid of stable coins. But what they can do, all the gambling transactions, Forex transactions, casinos, and so on, all the high-risk merchants, they already moved there. So, and it's only matter of time when all the other e-commerce businesses moved to stable coins. So, an interesting fact that if you can see the exchanges here, exchanges balances of stable coins, billions. So, a part of this 150 billions capitalization, around 80 billions hold by exchanges, which means all the users, they hold their stable coins on the exchanges. So they try to keep it there in order to be able to proceed very fast, either to buy Bitcoin or any other currencies, or maybe to convert their stable coins to fiat currencies and withdraw this money back. So next statistic, it's about market cap divided by major stable coins. And as you can see, Tether and USD coin, USDC, so they already took over 70% of the market share of all the stable coins. And back in 2014 or 15, when stable coin USDT appeared on the market, so at that time nobody understood how to use it. And if you take a look my presentation back in 2018, so 3-4 years ago, I already was telling to everyone that, guys, the stable coin, that's the future. And that's what we see now, that's what happened. And I see a lot of new participants coming into this industry. So then early you enter to this water, then better and easier will be your life in the future. So, as you can see, exchanges addresses with non-zero balances. So what does it mean? It means that if you a part of this 100 billion capitalization, and nevertheless that 80 billions the users they hold with the exchanges, so more than 400, I think it's already 4.5 million wallets hold or like hold on the exchanges only by USDT wallets. So, and USDC, it's much less. I think it's 1.5 million addresses. And this is, we are talking about non-zero balances on the exchanges. So, and can you imagine how many addresses? It's 100 millions used by just users, by individuals, by retail clients. So, number of transactions or number of coins. As you can see, the peak was in the beginning of 2021 when the Bitcoin hit 64K. So that was the peak. Then it was the small correction, and then we see coming up growth again. And I don't know, I expect, and you know, if we put here, like next to this slide, the number of transactions of the major coins, you will realize that now the stable coins, they are used especially for the transactions, and all the Bitcoin and Ethereum transactions, they used mostly as an investment. So stable coins, they became the real asset for the transactions, because now if you want to send 1 million USDT or $1 million to anyone or any counterparty who accept stable coins, and you have a choice to send this transaction by wire or by stable coin, if it's not transaction for audit or something like that. So I'm pretty sure that 90% of you will choose to send USDT. So that's why you see the real growth. It's not, we are not talking about something, it's the real numbers. So as you can see them every single day. Next, it's about structure of stablecoin. So, of course, you can see the custodian who holds the real fiat funds, and this custodian checks, and they have to be audited every single quarter. It's mandatory for the regulated stablecoins, and for the unregulated stablecoins, nobody checks them for sure, and all the auditors who check them, you know, they can somehow miss something. So this is why the regulated stable coins, they are well trusted, and you can rely on them. But there are also some disadvantages that I will explain in the end of my presentation. So, of course, every single regulated or unregulated stable coin has to have custodian. Issuer company might be just technology company. If you don't hold the client funds, you don't need to be regulated. So you can be as a technology provider, technology third party for these stable coins. Then smart contract. Of course, how to develop smart contract is pretty easy, guys. You can just either copy USDC or USDT, or you can adjust something and issue your own smart contract. Then what all you need to do, just upload this smart contract to the blockchain network. So that's how you can start your stablecoin business. But of course, you need kind of administrative panel for your team in order to be able to manage, to issue coins, to redeem the coins, and some other important functions. So that's the basic structure of any kind of stable coin. It's a custodian, issuer, smart contract, and of course user. And when you issue stable coin, this stable coin goes to the market. So actually you inject into the crypto economy your new coins, and then these coins, they start circulating into this crypto economy. Next function, it's transfer, and transfer the logic is completely the same as for any other potential token. So you have a smart contract, you have a sender, you have a receiver, you have a miner who validates transaction, and you have a issuer. In this case, for example, it's a Tether company. So, and when you send the tokens from one wallet to another wallet, or from one address to another address, so these tokens, they go through the smart contract, and they have to be validated by miners. It's miners, I call, like, it's a general term here, but it might be proof of stake, it might be proof of work, or proof of history, like you see here. And proof of history, okay, everybody knows about proof of work, so no need to explain how it works here, right? So all the major coins, still Bitcoin and Ethereum, they are based on proof of work. And the mining business, it's also good, but it's kind of not online business. It's mostly as a offline business. But mining business is also good, and it's still growing up. But now all the new, let's say, generation of coins, if you take a look, mostly of them, they run based on a proof of stake. And even Ethereum, they have been trying to migrate, to upgrade their blockchain Ethereum since 2019, and only last year they were upgraded to the transition version. So now they already launched the second network, second chain. It's based on the proof of stake, but still the mainnet works still on the proof of work protocol. And the new protocols, it's a proof of history. And for example, Solana, why it's so hot now on the market, everybody is talking about Solana because it's much cheaper and much faster even than Binance Smart Chain and Tron, because Solana based on the new approach. It's a proof of history. So it's very fast and it's very cheap. So, and the last function, the last main function of the stablecoin, it's a redemption. And when you send tokens like to the issuer, and the issuer confirms that he receives the tokens, then custodian issue the release, actually fiat funds, and send to the user. Of course, guys, for example, now if you come to the Circle company, they are issuer of USDC coin. So if you decide to redeem the coins through them, most probably you will be rejected. Yeah, they will tell you, hey, you can go to any other exchange, Coinbase, Kraken, Bitstamp, B2BX, and you can redeem your tokens there and get your fiat currency or euro dollar on your account through exchange. Because basically they do focus on an institutional size of clients. For example, some hedge funds, you know, one of the popular model now, because DeFi sector is now it's also hot topic on the market, and it's growing up every single day. And what hedge funds they are doing now, so they are taking deposits in dollars, they convert through, again, Circle or through regulated exchange, convert those dollars to USD coin, because it's a regulated where you can get audit statement and so on, and then they invest this money to DeFi projects, so they get API annual percentage yield around 3–4%, but comparing to the 0.1% interest rate of banks, it's a huge difference, right? So that's what they are doing, and then they take 20%, let's say, success fee and share the rest with the investor. So that's what they are doing, and that's how it works. Now, when you actually, in this case, for example, the big exchange, when they want to redeem their stable tokens, so they send to the issuer, and the issuer has to burn those tokens in order to decrease the number of tokens circulation in the economy, and release the funds that they were holding. So we go next. Guys, I will be fast, okay, because my time is almost over. The coins actually basically backed by 3 different types of algorithms. The first, it's a traditional collateral, and mostly of the normal tokens, especially regulated, they are based only on the first type of the collateral. The second one, it's mostly based decentralized stable coins, and it's like backed by Bitcoin, Ethereum, and any other crypto currencies. And algorithmic, like, don't trust them because mostly of them it's a scam. So next slide, it's about the difference. So now on the market, if we divide all the tokens, we can divide them by 3 categories. The first category, it's a centralized regulated tokens. But guys, nevertheless, they are centralized tokens. Why actually they are centralized? Because there is the issuer, and issuer controls all the tokens. This is why we call them centralized, because you have to also be careful that your transaction or your address might be blocked by issuer. There are some functions in the smart contract, and you can check all these functions right in the smart contract. So this is why it's a centralized. It's a pure centralized and pure controlled by issuer. But these centralized tokens based on decentralized blockchains. Because, for example, like USDT, you can find on Ethereum, you can find on Tron, on Binance Smart Chain, on Solana, and all of them, it's a pure decentralized networks, which is like blockchains, and tokens based on them. So this is why it's a centralized tokens based on decentralized blockchains. And then we divided them regulated and unregulated and decentralized, which means pure decentralized. Nobody can affect, nobody can block your transactions, and that's why DAI, it's still very popular stable coin, especially in the DeFi sector and on a DEXs. DEXs, it's a decentralized exchanges. So DAI there, it's a very popular stable coin. That's why it's reached already 10 billion capitalization. Centralized regulated stable coins. The well-known stable coin, it's a USDC. The next, it's a Binance USD. GUSD, it's not really usable, and Pax Dollar. It was the company Paxos, now they call themselves like USDP, USD Pax. And of course, the well-known unregulated stable coin, it's a USDT, it's #1. So all the exchanges, every one of them, they have USDT. And so USDT can be easily exchanged to fiat or to any other token or to any other currency. So it's a super, super liquid token. But of course, nobody can confirm to you that this company really have the same equal asset, like 79 billions in asset. So they tell that they have, but you know, they didn't provide any confirmation of these words. So the few words literally about DeFi, and DeFi now became one of the also key sector in terms of like crypto economy, and of course stable coins, they play their pretty significant role. And as I said already, now there are a lot of business models how you can invest your money, and the dream is like to store your USDT somewhere and get your interest rate much higher than the interest rate in the banks, for example. But of course, now banks, they are almost dead, like 0.1% interest rate. Nobody is interested in such interest rate. That's why DeFi, it's a response to such movement, to such decisions of the banks. So this is why now all the DeFi platforms where you can lend or stake your USDT, they became very big, and all the companies, especially who deal with crypto, they invest like at least 10–20% into this sector. So, and because of this, because like 2 years ago, guys, when we started investing into DeFi, our USDT or USDC stable coins, so the API average percentage yield was almost 20% a year. So we were holding just, you'd say you hold $1 million there, and in a year you received $200,000. It was like best time, you know. So like you were doing nothing and you were getting 20%. Now, of course, because everybody realizes, everybody came into DeFi sector, and now API became for AVA 3.5. It's an average, guys. So it's changing all the time, every second. Depends on the how many participants there who is going to stake and who are going to take. So depends on that. The API is changing all the time. So that's why take a look on DeFi. Regulation. Regulation for now for the stable coins literally doesn't exist. So all the countries, they have initiatives for the regulations. They have some actually protocols how to manage this, how to deal with this, but you can't find like precise regulation about stable coins. So, and I would say that America, United States, they are #1 country in terms of that, because America, they are very smart in terms of such approach. So they don't restrict. They allow you to deal with it. So all what you need to do, just report and pay your taxes. That's it, no matter what you are doing with them. So, and as I said in the beginning, the difference, so the stable coins are great. Just the only difference between unregulated and regulated stable coins that no one can confirm that unregulated stable coins, they are backed and they have enough assets to back all their market cap, the volume of their tokens. And but the transactions might be blocked by the issuer. So this is why still a lot of people, they still keep Bitcoin. Nevertheless, that Bitcoin is super volatile, but they prefer to keep their funds at least like 10, 20, 30% in Bitcoin, because Bitcoin, it's a still pure decentralized coin. No one can get access to your wallet. No one can block your addresses and wallet. And for the stable coins, you should understand that your address, if you receive from the red sector, because according to the IML, now a lot of systems out there who does this IML checks of all the transactions, and if you accidentally receive from one of the darknet, for example, so your wallet might be blocked. So that's why you have to be also careful, or you have to use system, for example, like B2B Pay. We do checks for you, so you don't need to worry about, because if it's a darknet, so we block such transactions. Just a few words about our product. It's a B2B Pay, cryptocurrency processing. So guys, we have a dedicated booth here for B2B Pay. We serve merchants, enterprise clients, so you can run different business models. And finally, you can start accepting cryptocurrencies and all stable coins. So do not limit your users. Start accepting cryptocurrencies, because it's already today, it's not the future. So we all have to develop this market, and then more companies are accepting stable coins, then better and bigger markets become eventually. So it's our company. Guys, I'm running out of time, and who are interested in our solutions. So we have B2Broker booth in the beginning of the expo, and B2B Pay booth right behind the speaker space. Okay, so, and guys, thank you very much for your attention, and I will be glad to share any information on the booths, and thank you. Bye-bye.